Hey everyone, welcome back to my channel. It's Nazir Kudashia back with another video. Today is Sunday. I know the market's closed, but I just wanted to recap over what happened this week. It was a crazy week. COVID stigma, stocks dropping, people panicking, crazy. And among those crazy and bad things, there are also some good things that I wanted to share. So before we begin, I want to say I'm not a financial advisor and you should always do your own due diligence and research before taking any investments. Let's get into it. Well, I kind of just mumbled over that entire disclaimer, so I'm going to try and do it again. So I'm not a financial advisor and you should always do your own due diligence and research before taking part in any investment scheme. So do your own research and don't listen to me. Okay, so there we are, screen share. Sorry if it took a little bit long. My computer is currently, my former computer is currently having some issues, so I'm having to use an older computer. So Intel stock drops the signs of continued AMD share gains eclipse earnings beat. Friday marks fifth quarter in a row, which Intel's stock has finished down 5% or more in the day after an earnings report. I gotta say though, people are actually looking forward to buying Intel. Like as soon as it drops to their certain target, they're gonna buy it. So I feel like a lot of people are waiting for that though, for it to keep dropping so that they can buy it and then they'll go back up. So Intel Corp shares dropped Friday as nearly a third of the analysts covering the stock cut their price targets following a strong earnings report that did little to distract from the advances of smaller rival Advanced Micro Devices Inc. Intel minus 5.29, that's like after close because today is Sunday, reported quarterly results that blew the doors off its own and analysts' estimates on Thursday, but its outlook amid a global chip shortage just barely cleared what Wall Street had expected. Shares closed down 5.3% at $53 Friday for their worst day since the last earnings report in April. In comparison, the PHLX Semiconductor Index SOX plus 0.63 closed up 0.6% on Friday. So this article was published, I think, yesterday. So that was Saturday before the market shut down for Sunday. Friday also marks the dubious distinction of the fifth quarter in a row where Intel shares have closed down 5% or more the day following an earnings report. Many analysts agreed that a decline of only 9% in Intel's data center group, or DCG, revenue of $6.5 billion was actually good news because analysts expected a steeper drop to $5.84 billion, though the chip maker was still losing market share to AMD plus 1.03% now. The bad news, other than an unimpressive outlook on a global chip shortage, was that Intel's transformation back to an undisputed leader in the semiconductor industry still appeared to be a long-term goal with little clarity or short-term progress. Next, this is good news. This is actually something that's happening tomorrow, Monday. Lucid Motors is going to start trading on Monday. Cool car though, by the way. It's a nice car. Lucid Motors shares are set to trade on the Nasdaq Monday after the company's merger with a blank check company was approved on a second try Friday. Lucid Motors and Churchill Capital Corporation, or CCIV, 3.93%, a special purpose acquisition company, or SPAC, announced the deal in February, an investment of about $4.5 billion in funding to Lucid. The stock is expected to trade under the symbol LCID. Not bad. That's easy to remember. That's really easy to remember, for me at least. So the Newark company hopes to start. Oh, California. I am so stupid. The Newark, California company hopes to start selling its Lucid Air, a luxury electric sedan built at Lucid's factory in Arizona in the second half of the year. The company had to extend the merger vote to Friday from Thursday after what it called very specific technical factors relating to revising its charter and the financing, a proposal that needed additional votes, Lucid said in a filing. And we also have a special guest here, the teddy bear named Biscuit. I'm sure you've seen him. I do this to make y'all laugh, but sometimes I don't even know if it works. Anyway, sad life. The company had to extend a merger vote Friday from Thursday. The merger itself was approved by more than 99% of the shareholders, the company said. Yay! A Saudi Arabian investment fund will own over 60% of Lucid, booking a profit of nearly $20 billion on its $2.9 billion investment in Lucid. That's amazing. That's just amazing. And what else do we have? Nope, nothing else. For Lucid, for Uber, we had a bit of bad news on Friday. Uber shares dipped following a $2 billion shrink in its DD investment. So, shares of Uber entered the day in negative territory Friday after the company's stake in DD declined by 2%, 2 billion due to regulatory challenges in China. Tech company Uber has seen its investment in Chinese ride-hailing giant DiDi Chuxing drop by over 50% in the past few weeks. Uber previously has 9.4 billion stake in Uber. However, the investment has dropped massively as the Chinese government cracked down on US listed companies operating in the country. I think they meant Uber previously has a 9.4 billion stake in Didi and not in Uber. But that's what I think that the article writer is trying to say. But Didi's American depository shares began trading at $14 a share in June on the New York Stock Exchange. However, the price dropped by 21% today and currently trades at $8.02. Uber controls 12% of Didi and is the second largest investor behind SoftBank. Uber bought the stakes in Didi after selling its Chinese business to the company in 2016. The latest development led to Uber stock price declining earlier today. Year to date, Uber stock has underperformed. Uber began the year trading at $51 per share, but began to decline in May after reaching a yearly high of $62. Didi has come under pressure from regulators in recent months. So I have talked a lot about this in my whatever Chinese stocks I do, Chinese stock videos I do, I've talked about this recently, that there was a high around its IPO and the market cap reached like nearly 70 billion for Didi. However, it didn't get to live long in the spotlight as Chinese officials began carrying out a cybersecurity review of Didi. The ride-sharing company was then asked to postpone its listing and review its network security. All Chinese companies that are on the New York Stock Exchange or being listed on the New York Stock Exchange are being faced by Chinese regulators and Chinese government. The regulators in China are planning to limit the ability of Chinese companies to list in America and other foreign markets. Some of the other two penalties would include the delisting or withdrawal of US shares, sources familiar with the matter told Bloomberg. Yeah, that's bad news, but as for the other companies like Alibaba, I don't think they can stop Alibaba since it's such like a giant. I don't think they can do anything to it. And Alibaba has government officials woven into its network that work for them also. So stock bulls look towards 17 trillion burning a hole in pockets. I found this curious. I'm like, burning a hole? So I just wanted to pull this up, and this was published yesterday on Saturday. Bloomberg and the stock market, the refusal of retail investors to back down from every macro threat has become the only story. When will it end? Judging by this, when will it end? I like that. Judging by the signs of all the pools of cash lying around, it could be a while. Among all the economic stories of the pandemic, the one about money piling up in people's accounts has been the most significant in the stock market, with the Standard & Poor's 500 or S&P 500 just notched its seventh gain in 9 weeks. Money market accounts, viewed in some circles as a dry powder reserved for equity deployment, sit at just under $4.5 trillion. A more obscure balance, the Federal Reserve's count of money on deposit with commercial banks has risen to 33% from 2019 with $17 trillion. While none of the money is completely unencumbered and professionals tend to hate the concept of cash on the sidelines, something is arming the day trader caters, is that how you say it? Who seem bent on letting no market sell-off last more than 24 hours. Take Monday, for example, when fears the Delta variant would upend progress sent the S&P 500 down as much as 2.2%. Dip buyers ran to the rescue in the rest of the week, sending the S&P higher by almost 2% through Friday, despite virus cases still spiking. We have investors who are eager to deploy cash, as Sarah Rahul Miller, investment advisor at Miracle Mile Advisors. People sometimes forget how much power retail investors can have over the market, and they've seen that play out clearly. That momentum can really push stocks together. And speaking of the Delta variant, it's time for our daily cases today for COVID, if this can load. So we in the United States today is seeing a shocking drop in cases. Yesterday it was 81,000. Today it is 22,000. Yay! So let's see if I can find the 82,000. That was yesterday, and today we have 22,000. This is like the data of the last 24 hours. The last updated 20 hours ago. They uploaded like every 12 o'clock, like every day. So they updated like a day behind usually because it's in the 24 hours, So that's it. So I believe that this is much better than what we were doing before. And that's all for today. Thank you guys for watching this video. I hope you enjoyed this video, found this information helpful. Please be sure to like, comment, and subscribe. If you made it to the end of this video, if you're one of those lovely, beautiful people, please be sure to comment powder puff below. And let's also your cue to subscribe. See you in the next video. Bye. Non-responsive. Oh my God. Why is this doing